Uri Landesman, president of Platinum Partners, is here to talk about this and where interest rates may be heading, which is, of course, the big topic of the week from the Fed. Welcome back to Arise Xchange, as always. Thank you. When it comes to consumer prices being down, we can't talk about deflation with these numbers, right?
I don't think so. I mean, really, it's mostly coming from gasoline prices. And so I don't really think we have any deflationary worries right now.
Does the Fed look at that CPI number, though, and get concerned at all that they're not getting the inflation numbers they'd like to see?
I think if they see it ex gasoline prices, they're going to be concerned. It certainly isn't going to expedite rate hikes.
Okay, so now speaking of rate hikes, anything that Janet Yellen said today, or this week rather, that surprised you at all?
You know, she's so dovish that it would almost be hard for anything to be surprising. But I think this Fed is actually substantially more dovish than the last one, which is almost inconceivable. So there wasn't anything in particular that shocked me, but literally, it seems like she's going to have to be absolutely positive that nothing they do can deleteriously impact the economy before they're going to even consider any rate tightening.
You said she's dovish, but other people have said there were some hawkish comments in there, if you kind of parse enough words, that eventually she's going to raise interest rates. But eventually, when is that going to be?
As Adam Smith so eloquently put it, eventually we're all dead. She was testy with some people.
Yeah, that
doesn't make you hawkish on policy. So I haven't ever heard one hawkish word out of her mouth on fiscal policy.
Do you think it was fair that some of the criticism was that she was being political?
Yes. I don't know that she's more political than Bernanke was, but this has definitely been a fairly political Fed.
Okay, when you look at the weekly jobless numbers, and it's hard, I know, week to week to really put much stake in that. It's interesting to me, I saw your notes earlier, that people you think are returning to the job market, and that is usually a good sign.
Yeah, I think it is. I've sort of claimed over the last number of years that the number was artificially low because so many people had pulled themselves out of the denominator, if you will, in the number.
Which is people entering the market.
Exactly. And so I think some of that is starting to change, given this broader perception that the economy is getting stronger, and hence there might be some actual new job creation.
And are we seeing that job creation right now? Is it false sense of optimism?
I think it's starting slowly. I think all of this is going to go a little slower than the optimists would like, but it is heading in the right direction. And as somebody pointed out to me today, we're a whole lot better off than the rest of the world is, for whatever that's worth.
Yeah, people keep saying we're the best looking house in a lousy neighborhood, but how long can that go on and be a reasonable comment?
Well, it can't go on forever simply because there's a lot of job creation here that's dependent on foreign demand. And so foreign demand continues to be a problem. And obviously, the very expensive dollar is a major headwind there. It can't go on forever, meaning eventually the domestic demand is not going to be enough to sustain a complete recovery.
And so when you look at Europe, and we continue to see problems in the Eurozone, and Germany basically carrying the continent on its shoulders to some extent, and Germany slowing down as well. And I've asked this of the other guests, explain to us why this is such a risk to us here, even if the stock market isn't reflecting it just yet.
Well, if Germany really slowed down, and Germany is the bellwether of the entire ECB, the prospects of the export piece of U.S. corporate profits dropping even more dramatically than it is already is really going to be very difficult in an organic growth market that probably isn't better than 5 to 7% to start with.
Okay, so what is your outlook then for stocks? If you're going to think that interest rates are going to stay where they are and the easy money is going to keep coming in, maybe the rest of the economy in the world doesn't matter.
Right. So I still think that we have at least one more leg of this bull market to go. I personally think that it will be preceded by a 5 to 10% correction. I do think we're going to see 2350 on the S&P this year. Mm-hmm. I reserve my right to change my mind, but that's when I'll kind of declare the end of this remarkable 7-year bull market.
And you think that's another 12 months maybe, or? Hard to say?
I would say 6 to 12 months.
6 to months. Uri Landesman, president of Platinum Partners. As always, thank you so much for coming by.
Pleasure to be here.
Well, coming up, nothing but net for the FCC in a historic decision regulating the internet. You're watching Arise Xchange.